Income is something that we all thrive to achieve in our daily lives. And one of the best income is called passive income. And the way to generate passive income, there are so many ways to generate passive income, but the easiest way is to invest in like a stock market. And there are so many vehicles in the stock market where you can invest and have your passive income, being generated. And today I'm going to discuss with you, or I'm going to bring to you the funds that I love. And this is a fund traded here in Canada. I mean, they also have US version, but today we're talking about the Canadian version, where you can invest your money and you get the monthly income. And this fund actually have high yield, which is what something I'm really like about this fund. So we're gonna deep dive into these funds and see, for yourself if it's right fit for you, and you're gonna make that decision. But before we going on the screen there to discuss about this fund, if it's your first time, this is Mr. Money Mind channel. On this channel, I talk about money, finance, and anything related to your finance. So please subscribe, like the video, share. Thank you very much. Let's go. So this fund actually is it's called Hamilton Enhanced US Covered Call ETF. The reason they call Enhanced US because it literally is Canadian fund, but it focuses more of the US companies. So we'll go deep dive and see what this fund is all about. Delivering your more US income every month. A ticker symbol of this is HYLD, and yield at this moment, or is today's price, is 12.23. A highlight of the fund: yield of 12.23 with monthly distribution, equal weight portfolio of 7 US equity, covered call ETF with sector broad mix similar to that of S&P 500, available for purchase in Canadian dollar or US dollar. So HYLD is Canada, and HYLDU, it's a US dollar. So even though you buy in Canada, you can have option either you buy in Canadian dollar or you can use US dollars to buy this. Selective US covered call ETF index. This is the index that this fund actually is following, which has the performance of S&P 500. Is it good fit for you? So a good fit for investors who wants to attractive monthly income in US dollar or Canadian dollar, diversify blue chip US equity exposure, high yield alternative to the S&P 500 with similar volatility. They have the similar volatility of that of S&P 500, and we'll see on the graph pretty soon. Enhanced growth potential and yield, adding more just of 25% cash leverage. So it does have some sort of leverage that they use to generate income. Fund objective: the fund seeks to provide attractive monthly income and long-term capital appreciation from diversified multi-sector portfolio, primarily covered call ETF. Focus on the US. So covered call is a strategy which is it's option strategy where its mainly purpose is to generate income. You can go into fund perspective. If you go on this one of these funds, HYLD fact sheets in French or in English, you can deep dive and they will tell you how they do leverage and how they do cover call, all that stuff. Right, but today we're focusing more of not too much on technical, but more of the fund fact itself. So performance of these funds. So in Canada and the US, pretty much you can see it will be, in the US will be 13. That's a NAV, net asset value, price, and net asset value of in Canada is about 12. That's exchange rate. HYLD, that's a ticker symbol. We've discussed that before. A yield is about 12% at this moment. If we go down here, we'll see index performance. So we've said that this fund actually does follow the index, which is selective US covered call ETF index, right? So we can see the performance is similar to that of S&P 500. That's selective, and that's S&P 500. We can see there, and we can see it's pretty much the same, similar performance. But the difference is that you make more yield on this one versus S&P 500, and we'll see the difference, which is here, high yielding. So we can see here is 12% you're going to get on the HYLD. If you invest on S&P 500 ETF, for example, VOO or S&P Spider, SPY, or here in Canada as ZSP, you'd get about 1.5, 1.57. Overview, sector allocation, we say it does, it's a broader ETF, even though it's a general, even though it's actually a covered call ETF, it's actually broaden its sector. We can see here is that technology is 26%, consumers 39%, communication it's 11%, financial is 8%, industrial 5%, energy is 2%, about 2%, basic material is about 14%, and utility is almost 0. So it focus more on consumer staples, consumer in general, like either consumer staples or consumer things you buy, we use all the time. And it has more of technology, is 26%. So the biggest chunk on this is consumer, and consumer, of course, kind of Walmart, for example, like 3M is consumer. So it's a big blue chip company, which is good. That's the reason why I like this fund. It's a really solid fund, so what they do is literally buying stocks from those sectors or from those different sectors, and they do rate cover call on those. And if you want to know more about covered call, how cover call is used to generate income, you can actually watch other videos on YouTube, and there's so much explanation about that. Today we're now going to talk about all the technical of the covered call ETF, because that's a long topic. So holding of this fund, holding, it has QYLD, Global Nasdaq 100 covered call. All these are pretty much mostly US covered call ETF. So when you have a fund like this, which is a fund but also has underlying funds under the fund itself, we call it fund of fund. So it's a fund that you buy, but underneath it, it does have other funds that it invested in. So we can see QYLD, which is the biggest, one of the biggest US covered call ETF, which follow the Nasdaq 100. And we can see TXF, tech giant covered call. We have a global Russell 2000, very solid. Russell 2000 is more of like middle small companies with the potential growth. And we have a global X S&P 500 covered call, Harvest brand leaders plus income, Harvest healthcare leaders income. We have Horizon Gold's producer equity covered call. So those are underlying a holding. Within this underlying holding, of course, for example, Nasdaq 100, it has those 100 biggest tech companies, right? Like Apple, Microsoft, Amazon, Facebook. They'll be under this fund. Now, fund details. All Hamilton ETF are available for purchase on the Toronto Stock Exchange, because Hamilton itself is a Canadian company. So it's like a fund management company that it's in Toronto, Ontario, Canada. So Hamilton ETF are available for purchase on the Toronto Stock Exchange and can be used in RSP, TFSA, or personal margin. These are type of account where if you live here in Canada, of course, these are the account that you would have, and you can invest using those accounts, and then to build your portfolio. To set up a DRIP, please contact your individual brokerage. So you can set up DRIP, meaning when you get those dividends or those monthly income, instead of you taking the money, you can actually have the money or the income that comes in, buy more unit, or you can just do that yourself. I personally like to do by myself. I don't do DRIPs. So ticker symbol is, we said ticker symbol, it's HYLD in Canada. And if you want to buy the US, if you have US fund in your account, you can buy HYLDU. Exchange, where the fund is exchanged, is in Toronto. Inception was in February 4, 2022. So it's a brand new fund. But being a new fund does not mean that it's a new investment. There's no proof of it. No, we have Solactive index that's been there for a long time. So if you want to know the fund, you just follow the index rather than the fund itself. And we have these guys here. Most of these funds have been here for a long time. For example, QLD has been here for a long time. And then investment style is more of equal weight. Asset under management is 1.98 mil, 100, almost 200 million Canadian, and yield at this moment is 12. Distribution, it does monthly distribution. So every month you would get those income and you can reinvest the money, or if you want, you can take the money, use it. Rebalance, how they rebalance these underlying ETF, they do semi-annually. So every 6 months they do. Management fee, of course, when you have the funds, any type of fund, you'd have management fee where they're going to charge you 0.665. So to put this in perspective, meaning if you have $10,000, they will charge you about 65 a year. So it's not that much. If you have 100,000, they will charge you 600. Like that's a very little. Administrator, of course, is Hamilton ETF Management Canada Inc. So, and let's go here. We'll see a little bit about distribution history. We can see here it does pay every month, and it pay about 14 cents. That's equivalent to 14% yield. It was lower, and if we go even lower, if we go on, this is like a 30th, March 30th, it was paying about 13.75. Now we went to 14. So they do have tendency to increase the yield, so which is good thing. So yeah, that's all about this fund. So if you're interested, you can go more. You can, if you're interested and you want to know more about this fund, you want to deep dive and see what they're all about, you can go to HYLD fact sheet. Go on the website, which is hamiltonetf.com, and you can, I'll put the link below, and you can go in there and deep dive yourself. You look perspective and everything like that. But that's all I have for today. If you like, what do you think about the fund? Do you like covered call ETF? Do you like income funds, which will generate you passive income? You don't have to worry about, working for the money. So that's all for today. Again, if you like the video, please like, please subscribe. Thank you. Till meet again next time. Bye bye.